start with probably everybody's favorite area so far, the Paycheck Protection Program loan. So before we start on this particular section, as many of you are probably aware, banks have already been accepting applications, so some of this might be second nature to you, or you've already heard it. There is a lot, well, maybe not a lot, but definitely certain areas of this piece that are still up in the air that guidance is being released on. And when we talk about, when I mentioned back at the beginning about guidance changing daily, a lot of it is specifically related in this program. It seems SBA is confused, the banks are confused, and they're all trying to piece things together as quickly as they can to try to roll this program out as quickly as they can. So just be advised as we go through this, if you've already applied for one of these loans with your banks, with your lending institutions, they may, as we do understand it, it's not a simple, and this is a good thing, it's not a simple, if you didn't provide the correct information, you're denied. Most of the banks and lending institutions should be coming back to you to request additional information from you if they need it. So just throwing that out there, and just also keep in mind that banks are, we're hearing from many lending institutions that the applications have already surpassed 1,000 applications. As you can imagine, many businesses are attempting to take advantage of this, so they are moving as quickly as they can, but be advised that this will probably be a little bit of a process as well. So you're not going to necessarily have the money by the end of this week or anything like that. So unless maybe you were first in queue. So, so let's go through just a recap of the eligibility, and for each of these sections, I will be pausing at the end for questions. So a refresher of who is eligible. Any business concern or nonprofit that has 500 employees or less. This is full and part-time included. So when you hear later about the full-time equivalency calc, that piece is coming into play in the forgiveness piece. The banks and lending institutions may be asking about that information up front, but the loan is supposed to be based just off a straight employee count of full and part-time employees of your most recent payroll. If applicable, the size standard and number of employees established by the administration, and from here on out, if you hear the term administration, we mean the SBA administration. They maintain a list for each industry on what the average number of employees is, and if you're in, I can't think of any off the top of my head, but there are certain industries where the average might be higher than 500 employees, in which case you would still be eligible. If your NAICS code begins with 7.2, and 7.2 codes are the accommodation and food services sectors, comprising of establishments providing customers with lodging and or preparing meals, snacks, beverages for immediate consumption. So food manufacturing, and based on lodging, I'd assume hotels might fall into that category as well. The 500 employee limit is based on a per physical location. So if you have multiple locations, 500 employees per location. Otherwise, it's 500 employees in total. And we won't touch too much on the aggregation rules today, but the application will ask about aggregation of other businesses. So you're probably listing other businesses you may have, and that is really to come into play on the 500 employee limit. That is why they're asking that question. There is an inclusion of sole proprietors, independent contractors, and self-employed individuals. The eligibility requirements, this is what's spelled out in the bill. It's still a little unclear at times of what the bank is actually going to be requesting, as a lot of these individuals are being told they can't apply until the end of this week. But they're looking for some payments of compensation to income. There's a wage commission, income, net earnings from self-employment, or similar compensation that is not more than 100,000. We'll get into that 100,000 limit in a few minutes. So the documentation they're going to be looking for is, payroll tax filings. If the self-employed individual has their own employees. Think of a Schedule C with their own employees. It looks like Forms 1099 miscellaneous that you receive as a self-employed individual will be a form of documentation, and income and expenses from your sole proprietorship, which would be your Schedule C. The unclear part of this, in my opinion, is a lot of Schedule Cs, due to self-employment tax, really do try to reduce their income through accelerated depreciation. So your Schedule C income might be pretty low. There's no comment at this point, no guidance in the bill on whether or not depreciation will be added back or a factor at this point. So self-employed individuals, just please know it is there, but the guidance at times here is still a little unclear, and hopefully more will be coming out soon. All right, payroll costs. That's the allowable uses for the loan. Payroll costs include the first four here: salary, payment of cash and tip, payment for vacation, allowance for dismissal or separation. Think gross wages there. Gross wages are how you're coming up with your payroll costs, and you can include employer and health insurance costs and retirement benefits. A lot of the applications and calculations will be asking for that information. And payment of state or local tax assessed due to pay compensation of employee, that is state unemployment, your PA SUTA rates. So those figures will all be allowed to be included in the calculation of payroll costs as an allowable use for the loan. Put a pin in some of this stuff that I tell you for what's going to be forgiven here, but this is what's allowable, and payroll costs, you'll see, is going to be the main way you calculate how much you're allowed to take as a loan. They do not include, you are going to have to do a limitation when you do this calculation for anybody in excess of $100,000 as prorated over the covered period, and the covered period is February 15th through June 30th of 2020. You're going to, basically anybody who's salaried making over $100,000, you will reduce them down to $100,000 as their gross wages. It appears that the intent of the bill was $100,000 as a salary limit, not including benefits. So if their benefits take them over $100,000, you appear to be okay there. This next bullet point, taxes imposed or withheld under chapters 21, 22, 24 of Internal Revenue Code 86 is probably the biggest sticking point and mystery right now, because this is definitely in the bill as an excluded cost. And it talks about, and those chapters are basically your federal income taxes that is withheld from employees, and the Social Security and Medicare that is withheld from employees, as it says here, or imposed, which is the employer portion. So the AICPA has released their own guidance in conjunction with another entity called the National Payroll Reporting Consortium, that these taxes would not be excluded. That their guidance is that they would not be excluded from the payroll cost calc or the loan forgiveness on the back end. We will say that is not in line with what the bill says right now. So what we're basically telling you at this point is you can include these taxes. What we have seen, at least from the SBA and AICPA, is that you can include these taxes in your calculation for how much of a loan you're allowed to take. The forgiveness piece is to be determined yet, in my opinion. The bill says it will not be forgiven, but there are many articles and publications out there that say it will be forgiven. So you are in a wait and see pattern there. And if you're applying for this loan, my personal recommendation would be don't necessarily count on the fact that they will be forgiven. And unfortunately, if you ask your lenders, a lot of them do not know the answer to this either at this point. We've tried to confirm it ourselves, and we're not getting very far with it. So moving on, compensation paid to residents outside the United States does not count. So your employees all must be living in the U.S. And if they are taking qualified leave payments under the Families First Act, you will not be able to count that towards your forgiveness, because you're already going to be getting a credit for that in the form of a 941 reduction payment, which we won't spend time going into now. But that, if you want information on anything in the Families First Act, I'd refer you back to our website in the COVID Resource Center. We have a webinar from a couple weeks ago posted there. You can use it for continued group health coverage. That would be your employer health coverage costs, payments of interest on mortgage obligations, but it can't include prepayments, so you can't use this money to pay off your mortgage quicker. Rents, utilities are included, and you are able to use interest on any other debt obligations that were incurred before the coverage period. Now, again, some guidance has been released here that most banks are taking the intent of this bill to cover payroll costs. So although these other costs are allowed, it definitely appears that the banks and lending institutions, SBA, are going to limit your forgiveness to 25% of these costs. Okay, and when we get to the forgiveness, you'll see a couple of these costs aren't included in forgiveness. So you can use the loan for it, but they're not necessarily going to be forgiven. As mentioned, the covered period is February 15th, 2020 through June 30th, 2020. And the loan application must be submitted by June 30th, 2020. That's the period. This is a first come, first served basis. They are already discussing additional funding. The bill originally allocated $349 billion for small businesses to use here. But as you can imagine, that's not necessarily going to go very far when you're talking every small business in the United States potentially applying for something like this. So it is a first come, first served basis, hence the rush to try to get applications in as quickly as you can. I would say, again, this is only my personal opinion, I will caveat that, but Pennsylvania, New York, and California are some of the hardest hit states by this right now, and some of the certifications you have to make, we can already make. I'm not sure those certifications can be made in other states yet. So in my opinion, Pennsylvania is probably getting a jump along with New York and California on some of this stuff. So if you're just getting your applications in now, I certainly cannot guarantee that you would still be getting the money, but I think there's still a good chance you would qualify. Money may run out quickly, but I think they're going to apply for more, and it would be a little fruitless to give you till June 30th if all the money was going to run out by April 10th or something like that. So what we are hearing, this part was not necessarily in the bill, but this is what we're hearing. Business and sole proprietors that have employees, so again, a Schedule C where you're paying wages, could begin applying on April 3rd. Some banks, depending on their size and how quickly they can get stuff up and running, we're just starting to accept applications yesterday and into today. So it's a fluid process. That's a general statement there. And we're hearing that self-employed and subcontracted individuals can begin applying by April 10th. That's what we're hearing. If you do fall into that category, we really recommend you contact your lending institution and see if they are accepting applications for you early. Okay, the maximum amount of loan. This is another fun area that has been up for some debate. Is it the 2019 calendar year, or is it the 12 months preceding the loan application? The bill will say the average total payroll costs, and that's all those costs that we just went over during the 1 year period before the date on which the loan is made. So that's where the bill is saying the previous 12 months. A lot of lending institutions and SBA have released guidance that they are just using 2019 calendar year. Some are using either or. So again, our recommendation is give your particular lending institution what they are asking for, the period they are asking for, and maybe just have the other one ready to go should they come back and ask for additional information. If you are a seasonal employer, the average total monthly payments for payroll shall be the 12-week period beginning February 15th, 2019, or at the election of you, the recipient. You could say, I want to start at March 1st through June 30th. I think that 15-day period is in there for the colder weather states that might not be up and running until March 1st or later. But you're going to take your total payroll costs, you're going to divide them by 12, and you are going to multiply that amount by 2.5 times, and that is the eligibility of your loan. Or if you exceed 10 million, congratulations, but you're going to be limited. So we have not seen anybody really approaching that benchmark, but that is the cap. If you were not in operation, if you're a new business and you were not in operation during February 15th, 2019, you would use the average payroll cost from January 1st, 2020 through February 29th, 2020. So take your total payroll, divide by 2, multiply by 2.5. That's what you'd be eligible for. There's not a lot of guidance right now on what happens if you went into business after January 1st up through February 15th. I assume it would be you're still using that period and just dividing it either by number of days or 1.5 months or 1 month, depending on how that's working. Your business must have been in operation as of February 15th, 2020. Okay, and to be clear, that means you had to be up and running. You couldn't start a business after that. If you're a seasonal employer that doesn't open until after February 15th, I believe you would still be included in this count. Okay, I believe we had a question earlier about collateral and stuff. This is the loan where everything's waived. Okay, the Paycheck Protection Loan. Fees are waived. Personal guarantees are waived. There's no collateral. There's no recourse against any shareholder or individual unless you use these loan proceeds for purposes not covered previously. Let me just be clear there. I am reading a number of articles where that is a given. Like, don't mess around with this. If you are applying for this loan, use it for the costs that you say you're going to use it for. If you skirt around that, that you're not only could they come after you for recourse, but you probably jeopardize all these other waivers here of fees and guarantees and collateral. Unlike the SBA loan that Rob covered, or the EIDL loan as it's known, this one does not matter if the borrower could obtain credit elsewhere. So, and that just means you were unable to go to another bank. But this one, even if you could go to another bank and get credit, you're still eligible for your lender. And again, no prepayment penalties on this one. So, this part has been clarified by SBA. The bill had a lot of people were hearing maturity up to 10 years and cannot exceed 4%. The administration has decided that 2 years is going to be sufficient. So the maturity will be 2 years from the date the applicant applies for loan forgiveness, and we'll get into how long it's going to take them to decide on the loan forgiveness, but it appears that your 2 years is going to start from that date. Interest is going to be charged at 1%. Originally, you might have been seeing it was going to be 0.5%, but they came out and cleared that up, and that's going to be 1%. And your loan repayment, including interest, will be deferred for 6 months. Again, that's not from the date you apply for forgiveness. That 6-month period starts on the date you receive the funds. So you're going to receive the funds. We'll get into the period that you have to use them, but your interest and principal, any part that's not forgiven, would be deferred for up to 6 months. And that's basically saying from the time you use your loan proceeds through that 6-month period, you need to apply for the forgiveness. All right, what are your requirements as a borrower? The first one, first two are probably the most important here. Uncertainty of current economic conditions make it necessary for this loan request to support the ongoing operations of the eligible recipient. Being that we're in Pennsylvania, A lot of businesses are shut down, even ones staying open as life-sustaining businesses might, might not be doing as well due to their customers being closed. So we're not seeing many scenarios where you couldn't say that the current economic conditions make it necessary. Even if you, and I want to be clear, even if you think you have enough money to get through the next few months, you're still eligible to apply. The banks will have the ultimate determination on whether or not they think you need this. But it doesn't hurt to apply. The worst they can do is say no if you want to utilize this. If they say no, at least you tried. So. And again, you have to acknowledge that the funds will be used to retain workers, maintain payroll, mortgage payments, lease payments, utility payments. Again, I'm not going to get into my opinion on which course of action is best because each situation is definitely different. But just be aware that the purpose of this loan is to cover your payroll. So if you already have people on unemployment, it's up to you on whether or not you want to bring them back. And we're going to get into that piece in a little bit. The last two are pretty much just saying that you're not doing an application for any other loan under this subsection, and that you haven't already received one. They're specifically talking about the PPP loan here. If you want to do the PPP loan and you want to do the SBA EIDL loan that Rob was talking about, you are eligible to apply for both. They cannot be used for the same purposes. So if you are going to do the EIDL, you can, and that part won't be forgiven. You can use that for other business expenses. Think workman's comp insurance, think office supplies, things like that. If you're staying open, you are eligible to do both, but the other one has a lot more restrictions with it. So, okay, so that was the loan process. And before we get to some questions here, let's just quickly review loan forgiveness. So loan forgiveness is going to be eligible for the covered period that is 8 weeks beginning on the date of the funding, basically. So once you get the money, you're going to have 8 weeks to pay your employees and utilize it for the other costs we talked about, and all those costs will be eligible for forgiveness. The eligible forgiveness will be on the payroll costs, interest on mortgage obligations, rent, and utilities. So although you can use the loan interest on other debt obligations, think equipment loans, and although you can use it to continue employer health insurance, the bill is saying that these costs are not listed as eligible costs to be forgiven. So keep that in mind if you're going to utilize the funds for that. You're going to submit an application. There will definitely be more details on this coming. We're just telling you what we know now, but you're going to submit some sort of application that is going to ask for your full-time equivalent employees on payroll and their payroll rates. You're going to have to include your payroll tax filings, and you're going to have to submit probably canceled checks, payment receipts, or other documentation verifying that interest, rent, and utility payments if you're asking for forgiveness for those. Documentation is a must to qualify for forgiveness. So, most of us would definitely have that, but just keep in mind if for some reason you're not keeping documentation, they're not even going to entertain forgiveness on it. The bill is saying right now that the lender shall issue a decision within 60 days. So when we talk about that 6 months deferral period, if you're getting the funds, you're going to have 8 weeks to utilize them. And then if you apply, you're probably going to hear within 60 days. I do expect that will probably be quicker, but that's the bill is allowing SBA and the bank 60 days on that. And I want to be clear, the bank will probably be the ultimate decider on what is forgiven, because the banks are the ones funding these, and they will have to go back to SBA and show what they forgave and then get the money from SBA. So I don't believe SBA is going to be monitoring that. The banks are going to be the ones making that decision. Your forgiveness would not be included in taxable income. So good news there. Okay, I'm going to put this in layman's terms as best I can here for the reduction of forgiveness. There's a reduction in forgiveness based on maintaining employment determined by a ratio dividing full-time equivalents during the covered period. And you're going to look at the preceding year, or really whatever period you based the loan on. So what you're going to do there is February 15th, 2020 through June 30th, 2020. You're going to look at what your full-time equivalent employees were during that period. And you're going to go back and compare that to the full-time equivalent you had during February 15th of 2019 through June 30th of 2019. For sake of argument, if you, and this is where it talks, you'll see here in a minute, you'll be able to bring employees back from unemployment, but let's say you don't. If you leave them on unemployment and you only have 10 employees during the 2020 period and you had 20 employees during the 2019 period, they're going to take 10 divided by 20, 50%, and they're going to say whatever you're requesting for forgiveness is going to be reduced by that by 50% in that scenario. And so if you had a $250,000 loan that you're applying for forgiveness for, only 125 will be forgiven. Unfortunately, there's not much in here on having less employees due to different circumstances. The reason this is in here is because A, they want you maintaining levels of employment before coronavirus, but B, your loan was based off a lot of 2019 data. So the amount of loan you were able to take and factor in was based off your 2019 payroll data. So that's why they're utilizing this calc. So also, if you have an employee who makes less than $100,000 and you have reduced their salary in excess of 25%, you will also have to do a reduction calculation for that as well. So in general, what they're trying to do is say you need to maintain your employee levels at the levels you were and at the rates you were before coronavirus hit. That is where they're going with this. There will be more guidance coming on how to officially calculate full-time employee equivalents and things of that nature. So we're in a little bit of a wait and see pattern. So just keep that in mind that'll be coming. If you currently have a reduction in employees from the period of February 15, 2020 through 30 days from enactment date of this act from the previous year due to layoffs, and you bring those people back by June 30th, there is no reduction. That part is a little unclear. June 30th is obviously there as a date in the bill. However, I don't know that you're going to qualify if you get the proceeds by April 15th, for sake of argument. And that 8-week period starts, so you pay people through June 15th, but you only pay the people that are still working for you. You don't bring anybody back on unemployment. And then you bring them back between June 15th and June 30th. You can make the case that you brought them all back. I don't know if the bank will agree with you there. So just keep in mind, again, the intent of this bill is to continue to cover payroll for people you were paying. So there is a period where you can bring them back. Our recommendation would be you bring them back as quickly as possible if you're hoping to have the whole loan forgiven. Finally, if you receive the $10,000 advance under the EIDL piece, the SBA piece that Rob was talking about, your forgiveness will be reduced by that amount. It's not quite clear, even if you use that $10,000 for different purposes. Right now, it does sound like if you get that $10,000, your forgiveness is going to be reduced there. So that is the paycheck protection piece. Is there any questions?
We have a lot of questions for you, Drew.
I figured.
Let me scroll up to the beginning so I don't miss anybody. Okay, what is the date used to establish number of employees? So this would be for the eligibility of the loan.
For the eligibility of the loan, the date used to establish employees. So the coverage period is on the application itself, I would be taking the employees you have from the last payroll as your number of employees. Again, the full-time equivalency calc will go into February 15th through June 30th of 2020 compared to February 15th and June 30th of 2019. So that'll be how they determine the forgiveness. But as far as eligibility purposes go, I would use the number of payrolls in your last number of employees in your last payroll.
Okay, and Matt just wanted to share that your Paycheck provider will give you this payroll information in a suitable format for submittal, which is a big time saver.
Yes, and if you're utilizing our in-house payroll service, we are prepared to get you the reports you need as well, if you haven't contacted us already about it.
Okay, this question goes back to the EIDL payment, so maybe Rob can chime in here. I have 30 separate real estate entities. Can each apply for the $10,000 advance?
I am going to defer that one to Rob.
I'm going to defer that one to have to look it up. Haven't had that question. There's probably some affiliation rules that come into play. And I don't know if they've been waived on this. They were waived on some other things, so I'll have to check into that.
Okay, and this question had to do with you talking about the payroll. So how about an LLC where income is passed through as individual income?
Yep, that one is a good question because the guidance is not completely clear. The banks do appear to be requesting your Form K-1s, which should have guaranteed payments or distributions or income listed on there, and it seems to be they will be determining it somehow through that. I do apologize. There's not a lot of guidance when the payroll piece is not evident. So if you're a sole proprietor that takes distributions, if you're a partnership that you're not allowed to take payroll, you just take distributions. There's not guidance in the bill on how that's to be presented and calculated. But I would recommend on that one that you talk with your lender and see if they have any available information. We do expect more guidance to hopefully be released on that soon.
Okay, what if you have 3 employees on payroll that are W-2, but you also pay one of your employees as a 1099 subcontractor? Can you still pay your subcontractor with this loan money, even though the contractor's wages will not be factored into the monthly average?
Actually, to clarify on that, and I'm not sure if this is consistent across all banks or not, but there does appear as one of the costs, and I apologize, it wasn't listed on the slides there, that payments to subcontractors, and let me caveat this by saying not if you're in the construction industry and stuff like that, where people have their own business. This would be payments to a subcontractor who pretty much only works for you. You could potentially include that number in your payroll calc for the loan, and then you could use that as an eligible cost to pay that subcontractor and potentially have that forgiven.
Okay, I think this is what you just covered. Do payroll costs include 1099 employees?
Yeah, 1099. We will not get into this today, but just be aware they're like 1099 employees. That's a whole nother can of worms on whether or not they should actually be on your payroll and versus paying them as a 1099. So you can talk with your accountant at the firm about that. But for purposes of this bill and this payroll calculation, your 1099 employees can be included and can be forgiven. But again, just a reminder, it's not, if you're somebody who uses a lot of subcontractors on jobs, it is different from that. It's not a subcontractor payment.
Okay, what about workers' compensation policy costs? Are they payroll expenses?
You would think they are, but they're not in this calculation. Workers' comp insurance is not included in this calculation and not included in the forgiveness.
Okay, and this is just a clarification question. Per my understanding of the forgiveness, rent and utilities cannot exceed 25% of the total forgiveness. You just said 25% of and utilities will be forgiven.
As I understand it, you can utilize up to 25, with the way the SBA released the guidance, you can utilize up to 25% of the loan that you are eligible for rent, utilities, and mortgage interest, and that would be forgiven. Anything over that percentage will not be forgiven. So even though it's an eligible cost, and it says it will be, the SBA has made their own determination that they want 75% of the funds to be used on payroll.
Okay, if you accept the PPP, are you required to pay out vacation or sick and personal leave to furloughed employees?
If they meet one of the requirements under the Families First Act, then yes, you are. You are required to pay that out still. It appears, I know this might sound confusing, but it appears that you can use the PPP loan to pay that, but you're not going to be forgiven on that because you're going to be getting a credit on your 941 taxes when you pay that. So utilizing the PPP loan and paying your employees not to work, as I understand it, does not get you out of the sick leave requirements under the Family First Act.
Okay, and then for companies that are reducing pay, excuse me, for employees to keep working, do these loans require the business to reinstate the previous pay?
It appears you can reduce, not appears, it says you can reduce the pay up to 25%. That's back to that second piece of the reduction in forgiveness calc. If you have employees making, for instance, making $20 an hour, it appears you can bring them down to $15 an hour and still be okay. If you can take them below 15, you're going to have part of that not forgiven. And it doesn't appear to be an all or nothing. Like say you took them down to $12 an hour, then that $3 an hour difference is what would not be forgiven, but the $5 reduction still would be eligible. I hope I'm saying that correctly and it's making sense.
We had a couple people ask this. Is the PPP loan means tested?
I'm sorry, that cut out. Say that again.
Is the PPP loan means tested?
I apologize. I don't know what that means. Means tested. You don't have any insight to what that means, do you?
Like a strong balance sheet type situation.
Oh, okay. No, it doesn't appear. It doesn't appear to be based on having. That's kind of back to my point I was making earlier, where if you have a stronger balance sheet or things are looking okay right now, you're still eligible to apply. The bank will ultimately make the decision, and they may decide that they have more pressing clients to fill, but there's nothing in the bill that talks about that. And if you're, for instance, if you have a strong cash position right now and you're able to, navigate the next couple months, you'd probably still be eligible to apply because who knows? We're one of the hardest hit states by this right now. So who knows if you're going to be in the same strong cash position, 2 or 3 months from now. So I think you could still claim economic uncertainty.
Okay, can the loan funds be used to pay suppliers? I understand this amount will not be forgiven.
Ooh. Yeah, definitely right on the not forgiven part. I could foresee the banks having a big problem if you decide to do that. I don't know that they'd take and throw you in jail or anything like that, but you might waive any part of that. Because the nice thing is, even the piece that's not forgiven, 2 years, 1%, no guarantees, no nothing. So that's the nice thing about that. You would probably jeopardize all that if you chose to pay suppliers with that money. So I would not recommend doing
that. Okay. One of our competitors ceased operations December 30th, 2019. We brought on their employees with the first pay date for these new employees in January 2020. This increased our total payroll by an additional 80%. Are we still required to use 2019 numbers when computing our average monthly payroll, or can we use January and February 2020 average?
Okay. I will defer that one back to your lender if they know. There's nothing in the bill that specifically talks about what happens if you've had a significant increase in employees. There was somewhere I was reading about the election. There's some sort of maybe election due to change in circumstances. I'm not completely clear on all the guidance there of what that means. Obviously, in that particular situation, utilizing the 2019 data to try to pay the employees into 2020 does no good. Your loan is obviously, the intent of the loan is to give you, almost 8 weeks of payroll. And obviously that can't happen utilizing that. So I would think there's probably some eligibility there to come into play. But the part I was mentioning about January to February of 2020 was more for not being in business in 2019. So you may want to check with your lender on that.
Okay, we have full-time employees, but the majority are part-time. Will the continuance of employment for full-time employees be what the forgiveness will be based upon?
It's going to be based on the full-time and part-time. The part-time piece is what's going to be factored into that full-time equivalency. I will give you an example of what I think this means, but you are going to definitely need to rely on guidance released down the road. But let's say you have, for sake of argument, 5 full-time employees and 10 part-time employees. Your 5 full-time employees are going to be 5 full-time equivalents. The rest of the 10, you're going to take their annual hours that they work and add them all up together, divide by 2,080. 2,080 is a 40-hour work week times 52 weeks, and that would probably be your equivalency calc. So if that works out to another 3, like if those hours add up to 7,000, 8,000 hours, and you divide by 2,080, and it gives you four employees, somewhere between 3 and 4, then your full-time equivalency in that scenario would be 5 plus 4, 9, and that's what the forgiveness would be based on, 9 employees. And then they do that same calc back to 2019. So if you have inconsistency between 2019 and 2020 on the hours your part-time people are working, even if you're maintaining like same levels, you're probably going to have some issues on the forgiveness piece. So that's a rough calc of how I think the full-time equivalency will work. Again, you're going to need to wait for actual guidance on how to calculate that.
Okay, what will they do for businesses like us who just began operating in June? Any guidance?
In June of 2019?
Yes.
Okay. I think if you're in that scenario where you started after the period, I think that is where you can either A, look at January 1st through February 29th of 2020, or you might be able to even look at like the most recent 8 months, and instead of dividing by 12, divide by 8 in that scenario. So You would need to check that with your lender, but I do think there's definitely eligibility there for you. And if push comes to shove and your lender wouldn't know, my recommendation would be go January 1st, 2020 to February 29th, 2020.
What about adding employees during those 8 weeks? We'll keep current employees as well.
Not specifically covered, but I would imagine that you'd be eligible and for potential forgiveness on that. And your full-time equivalency can't increase. It does talk about not increasing your total overall workforce. So maybe if that brings you back to where your full-time equivalency was in June 30th, between that period and 19, you might be okay. If you're exceeding your number of employees, that piece might not be eligible for forgiveness. The bill does not specifically address that.
Okay, so to qualify for the loan, the cutoff is less than 500 full or part-time employees, but the forgiveness test is based on full-time equivalents. Is that correct?
Correct. Yeah, correct. If you are a business that has full and part-time employees, you'll qualify based on the 500. If you're under 500, and my guess is your equivalency number will be less, but it will be less for each period when you take into the fact the part-time hours.
Okay, and can you give a definition for self-employed or LLC members?
A definition of what that means? So self-employed would be you're operating as a sole proprietor, or so you could be self-employed as an S corp. Okay, if you're an S corp or a C corp, and you're the only employee, you can still qualify for this loan. It's going to be based off the payroll data you pay yourself. So if you, unfortunately, in that scenario, if you tend to take only a smaller payroll and maybe utilize some distributions, it sounds like in that scenario they're only going to be looking at your payroll, not the distributions. LLC, partnership, self-employed would mean you have one of those entities set up. Once you're under one of those entities, you can't take it as payroll. You're only taking your living expenses, and your pay, so to speak, comes out as a distribution or draw against the business. And then those entities are typically paying self-employment tax, which is the Social Security and Medicare, as well as federal income tax on their personal returns. Partnerships and LLCs sometimes have their own tax filings if they're multi-member, and where the money will pass out, the income will pass out to you personally, and you'll pay tax on your personal income tax return.
If we lose employees during the PPP payment period, is there a max number we can lose?
No, if you're losing them because, unfortunately, what this bill doesn't cover is fear of not working, which I get is a big issue for a lot of businesses. They're definitely dealing with employees who simply don't want to come to work, because even if their place of business is life-sustaining and still open. So those, what do you do in those situations? The bill will say you got to bring them back and pay them. I understand that puts you in a difficult position, because now you're paying some employees not to work and some employees to work. And for those who are working, where's the motivation if they know they're going to get paid for not working? It's a decision you really need to make with your accountant at the firm, and see how big of an issue you think that's going to be. There's no, the deduction is going to come into play simply on that full-time equivalency, and the full-time equivalency is going to be looked at people you are actually paying. So you can't just sit there and say, well, we have an employee, but they're on unemployment right now. You need to bring these people off unemployment.
Okay, going back to the means testing, I have heard you have to certify need or lack of resources as part of SBA application for PPP. Is that accurate?
You have to make a good faith certification that you're affected by the COVID-19 virus. And that's back to my point of you can make the good faith certification that you don't yet know. I mean, you might be in a strong position now, but you know, if this thing continues, I mean, obviously we all hope we're back to work soon, but who knows? I mean, this could go on for another, you know, month, 2 months into the summer, and where are you going to be then? So, you know, I do think almost any business in the state of Pennsylvania right now, with the way things are going, has the leg to stand on that they could be negatively affected by this. You could keep working and keep sending out invoices to customers and clients, and they might not be able to pay it because they're not working. So that's going to impact your cash flow. You know, understanding you might have a strong balance sheet right now, I do want to be clear. The bank will make that decision. I'm not saying you're automatically going to qualify, but I think you can at least make the certification and then let the bank decide, you know, if they determine you need it.
Okay, what are the consequences if we increase employees' hourly wage during the 8 weeks for hazard pay?
I don't know the answer to that question. If the question is, can that be included in the forgiveness calc? Maybe. There does seem to be restrictions. It's not quite clear on increasing, you know, increasing your workforce, increasing your pay. Again, it's back to, they're trying to get you back to basic, back to where you were before the coronavirus. So if you're going to increase their pay for hazard pay, you might need to clarify that, try to clarify that with your lending institution. Are they going to potentially forgive that? So.
Okay, if you receive the loan, maintain operation and employee levels, how can they determine what the money was used for to calculate forgiveness?
So you're going to have to submit some sort of documentation at the end to show that you paid the employees through payroll, that you used it for rent. That's back to the canceled checks and things like that. If you're in business and you're still operating and you still are getting paid, again, you know, once, in my opinion, once they approve you, as long as you use these costs for eligible costs, they have to forgive it and submit it. So if that question's kind of being worded where, how are they going to prove it because I've been able to pay these employees all this stuff while still receiving cash and stuff in? Well, as long as you submit the documentation that you paid them, submit the payroll returns, submit the canceled checks, I believe you're going to be eligible for forgiveness. If you do happen to make it through this time while still kind of operating on all cylinders, then you know, in my opinion, congratulations, you have the government cover some of your payroll.
Okay, this is a follow-up question about the suppliers, paying the suppliers. The form doesn't give you an option for the amount loaned. In my case, this exceeds my payroll, rent, and utilities due to layoffs and reduced demand. What do I do with the excess if I can't use it for other expenses?
You hold it, at least for the 8 weeks, in my opinion. And that way, when the bank does their forgiveness calc, they can come back and say, okay, you know, you were accepted for 200,000, you only used 100,000, so, or we're only forgiving 100,000, so you're going to have to pay back the other 100,000. You know, at that point, you have 2 years to pay it back, so maybe at that point you could start paying suppliers. You're outside of that 8-week period now, and if you want the 2 years to pay it back, where you have the money to give right back to them. I am hearing a number of lending institutions are going to potentially treat this more like a line of credit, or even more so, think of it like a draw loan, where you might be eligible for $250,000, but you may have to come submit the documentation as you go, or tell them, hey, I need this for payroll. If I'm approved for $250,000 and my first biweekly payroll comes up and I need $50,000, then you'll go to the bank and they'll transfer $50,000 to you and hold the other $200 to kind of protect you from yourself. I'll also add that I'm hearing a number of banks are going to require you to set up your own bank account for this. I mean, they'll set it up for you, but a separate bank account for this. So.
Okay, if you have an S Corp and the only two employees are the husband and wife, and you receive, let's say, $25,000 from PPP, if you use $5,000 for 2 months of rent, utilities, and health insurance premiums, and the rest for payroll for the two of us, is the $25,000 eligible for forgiveness if my wife doesn't fire me in those 6 months?
Tracy, I apologize. I hate to make you read that again, but I was having some issues with my screen sharing here, so I wasn't completely following. Could you repeat that one?
Sure. If you have an S corporation and the only two employees are the husband and wife, and you receive, let's say, $25,000 from PPP, if you use $5,000 for 2 months of rent, utilities, and health insurance premiums, and the remainder for payroll for the two of us, is the $25,000 eligible for forgiveness?
Yes, in that scenario, I would say yes, because $5,000 would be less than the 25% that they're saying. So I would agree that full $25,000 should be forgiven.
Okay, and how are utilities defined for purposes of eligible costs?
It seems most the general definition, it's not completely spelled out in the bill, but internet, trash, water, electric, all things that you would probably normally consider utilities are probably going to count on this. There doesn't seem to be any exclusions if that's what the question is. Like okay, you can cover electric but not water or things like that. So little unclear on maybe cell phones and but the phone lines are usually considered utilities as well. So I think you could make the case.
Okay, have you heard of any lending institutions that are not offering these loans?
Yes, but I don't remember all their names. I'll give a general statement about this. Each lending institution is treating this a little differently. Again, I'm not trying to be negative about this, but the lending institutions are not, most of them are not all excited about this program because they're having to give out very low interest rate loans with no collateral based on payroll data. And then they got to decide if they're going to forgive it and go back to the SBA and try to get it back. So each bank is definitely handling the process a little different. General statement I'll make is if you do not have a relationship with a bank or you just have a deposit account, you're going to have, I'm not saying you won't qualify, but you're going to have a more difficult time qualifying. It seems that most banks in general are prioritizing customers of their own who have loans already with them. So if you do come across a bank that is not participating, I hate to say it, but you're probably in an unfortunate position if that's your lending institution, because I'm not sure another bank is going to consider you for this.